Good morning, winners. Welcome to Terry's Tips. So listen, I recently did a video on how to finance your real estate deals, right? And you guys loved it. And I outlined all different ways you can finance your real estate deals, finance your investing, about hard money and conventional and traditional financing and all these different things. I'll actually link that video to this video as well. But as I talk to you guys throughout the week, as I'm hearing the feedback, I'm finding that another huge barrier is even getting the down payment money. Like, you guys need to know how to raise the money to even get to the point where you can go to an investor, where you can get the financing, where you can have the down payment. And guys, I mean down payment for your own personal property if you're trying to be a first-time home buyer, or a down payment when you're trying to structure deals and maybe you need that good 20 to 40% for hard money, or that 10% to 20% for conventional. So in today's video, I'm going to outline ways that you can get the money to get your real estate, ways you can get the money for your down payment for your deals, okay? Listen, if you are one of my vets, y'all know what I'm about to say, but if you are brand new, get a notepad, get a pen, okay? Because I'm not doing this video just to talk. I'm going to give you some real items, some real tangible things that you need to evaluate to help you get money to start your investing, okay? Got it good. And if you are new to my channel, welcome. My name is Terry. I am an investor, self-employed entrepreneur, single mother of 3. And every Tuesday and Thursday, I upload brand new free videos on real estate and financing, personal and business credit, financial literacy, with the goal to help people learn how to leverage their credit to build wealth. Let me say that again, because I think sometimes people miss what this is about. I'm not sure what everybody else is talking about, but I'm talking about legacy. I'm talking about wealth building. I'm talking about breaking some generational cycles of poverty, okay? Getting some people free. So we're leveraging our credit, our knowledge, our skills to build wealth. Amen. All right. And I'm going to jump right in there and do my nugget at the end. I actually had to write some notes for myself because I have a ton of information to give to you guys. I'm going to talk about raising money, high level and lower level too. Like, if you're somebody who just needs a good 5 to 10,000, how can we get some money? And if you're somebody who needs 20,000, 30,000, 50,000 to structure some deals, okay? You got your look, I talk long enough. It's been 2.5 minutes now. That's enough time to get a notebook and pen. All right. So first, let's talk about whether you're going to get money through debt or through equity. Through debt or through equity, okay? And I'm going to outline, do not let any of these real estate terms or any of these terms kind of overwhelm you. I'm going to explain everything. So first, if you're going to kind of use a partner for debt, for down payment, what that means is that you may go to family member, friend, mentor, somebody, another investor in your network, a business partner, and say, hey, I need to borrow the money for a down payment, okay? So you're borrowing money from a private person, $10,000, $20,000, $30,000, and you owe them like a loan. That's why it's called debt. That means whether you make money on the deal or not, whether you have tenants in the property or not, whether you flip it and it goes well or not, no matter what. Let's say you borrowed $20,000 from your business partner for a down payment on a primary residence, on a second property, on an investment property, and you agree to pay them back $500 a month. Then that is a debt partner, a debt strategy, where you have borrowed from somebody privately to get down payment funds, and you are going to pay them back $500 a month until it's paid off. Debt, okay? Equity. Let's talk about an equity partner. An equity partner is going to be, and guys, there's a lot of these. I'm even one of these, okay? An equity partner is somebody that will give you money, again, for a down payment. This is also for like my bigger money. So for my people that need $25,000 to $50,000 for maybe a conventional loan or for a hard money loan, getting money that may not even be a JV, guy. JV is a joint venture, but you're just borrowing the down payment funds. An equity partner is somebody that will say, listen, I will give you $50,000 for this down payment, but you do not have to pay me back in monthly installments. You do not owe me a debt. I would rather be an equity partner. An equity partner means that they want to participate in the ups and downs of the deal for a percentage. So that means they may say, I will give you $50,000 for this deal. Let's say you plan on making $200,000 on the deal, and they're saying, I'm giving you $50,000 and I want 50%. We're splitting the profits 50-50, okay? And so an equity partner is giving you the money. You're not paying them back monthly payments. They are taking a percentage of the property, the percentage of the profits. Now, let me take a step back, because tip number one, guys, in finding, a partner, a business partner, family member, friend, mentor, investor in your network to actually give you the money, lend you either through debt or through equity for a deal, is having a good deal. Write that down, guys. I said that in another video. A good deal will always sell to somebody. So tip number one is getting really, really good at finding good deals, okay? And that may be through experience. That may be through trial and error. That may be through somebody guiding you. But find a good deal, because investors will invest in a good deal, okay? But the next thing, and I want you to also write this down, is why should they invest with you? Yes, a lot of times people are investing in the deal, but more so than anything, they're investing in you. That means, do you have the integrity? Do you have the knowledge? Do you have the experience? Always remember this, guys. People do business with people they know, like, and trust. Know, like, and trust. So let's talk about experience, right? So people are more likely to invest with somebody who has some experience doing real estate deals or flips or so forth than somebody who does not have experience. So if you are brand new, you're like, well, how do I get experience? You can get experience by doing smaller deals on your own and showing the profits and what you did. You can do experience by putting together like a syndication deal, saying, hey, I would like to do XYZ, and here is a property in this zip code that is, I can purchase for $50,000 and the renovations are $100,000, and I can sell it. The ARV is $375,000, and I'm looking at flipping it and getting this profits. Or you may look at rent if it tends on being a buy and hold. But be solid with your numbers, guys. Go to an investor with a plan. This is how much I have. This is how much I need. This is what I'm trying to invest in. This is what the profits are. Guys, when you're going to somebody and asking them to be a debt partner or an equity partner, you need to tell them how much money they will get, when they will get it, how it will be paid out. Have a plan. Don't just go to somebody like, I want to invest in real estate. Can you give me $50,000? No, no, I can't. What's your plan? How am I going to get my $50,000 back plus a profit? Guys, I've even myself, where I've had capital and I have a realtor in my network who is hustling hard. Like, she is doing deals. She is doing flips. I don't have the time. Look, I can barely answer all of y'all emails. So if you guys are waiting for a response from me, please give me a chance. I'm getting like over 100 emails a day. I'm doing my very best to get back to you guys as quickly as I can while still doing videos and clients and events. Work with me. Give me a minute, please. But anyway, look, segue. That, she's really hustling. So I'm a buy and hold, but I love flips too. For me personally right now, I haven't had the time to devote to flips in my area. So I said to her, hey, do you need money for your next deal? I came to her like, I'm willing to give her money for down payment for whatever she needs, for closing costs, for renovations, for a split in the profits. I was actually looking to give another investor some capital who has some experience, what she does, and who's doing the work really well. And she's a realtor, so she picks really, really, really good deals. There are other people out there like that, guys. Closed mouths don't get fed. Talk to your realtors, talk to people in your network, advertise about what you're doing. You can attract, laws of attraction. You can attract what you need into your life, okay? So speak up and let people know, one, that you have a good deal. And number two, be who you say you are. How you do anything is how you do everything. So having integrity, keeping your word, all those things are going to serve you well when you get into the space of real estate investing, where you want somebody to be a debt or equity partner to give you down payment funds so you can get the financing kind of going for your actual real estate deals. Okay. Got it good. All right, so let's talk about some other ways too, guys. So even this is where if you currently own a home and you're trying to start real estate investing, you can do a cash out refinance. You can do a home equity line. Step number one is finding out if you have equity in the property. That means don't say, well, I don't think the property value has gone up enough, or I think I owe too much, or this house, don't stop making decisions based on unknown variables. Let me say it again. Stop making decisions based on unknown variables. Run the comps on the properties that you have. Find out if you have equity. Find out if you can take out 70% or 80% equity, because most places won't let you take out 100%. Is that enough to help you? So doing a home equity line on property that you currently live in, your primary residence, or a property that you currently already own outright, or a cash out refinance is smart, guys. You're using an asset to acquire other assets. You're using an asset to acquire other assets. On top of that, it's super low rates right now, guys. So this is where, if you're going to borrow money, borrow at the lowest rate. Hello? Like, I would rather borrow something at 2% or 3% than at 5%, 15%, 20%. So use your asset to help you acquire other assets. Don't be scared to do that. If you're taking equity out of your house and buying a sports car, going on a vacation, just paying down credit card debt. Don't let me start with that credit card debt, because Jemal, the 95 millionaire, just did a video and he got so much kickback, and I agree with him 1,000%. Listen. Look, I popped this right into the middle of the video. You guys know I'm all over the place. But, I never tell you guys to pay off all your credit cards. You are literally just getting your credit good enough to qualify for your mortgage pre-approval, and your assets pay off your liabilities. That means if you have $20,000 worth of credit card debt, you have the option of paying off $20,000 worth of credit card debt, and then you just paid off debt and that's it. Or use that $20,000 to put in an income producing asset like a property that's going to give you tax write-offs, that's going to appreciate in value, that's going to have passive income, and you may only need to maybe use $5,000 to pay down some debt to get your credit scores high enough, get that income producing asset, and then that asset pays down the rest of your debt. Look, you got it, okay? I agree with them. I co-sign that, okay? And so this is where, use what you have to get what you want, okay? Use what you have to get what you want. So leveraging your current property or something that you own is smart. Let's talk about 401ks or retirement funds. And different jobs, different places of employment have different types of funds. It doesn't matter. If you have a 401k or whatever your retirement fund is, either doing a withdrawal or doing a loan is something that you can do against it. Yes, there are penalties, there are procedures. Pick up the phone and say, how much do I have in my 401k? Well, ma'am, you have $80,000. Let's say you only need $20,000 or $30,000 to kickstart your real estate investing. Find out. How much does it cost me to withdraw? How much does it cost me to do a loan? How much can I get? Ask the questions, do the fact finding, because again, a 401k, whatever retirement fund you have, that's actually like an asset. That's your money, guys. If you're using it to grow, that is smart. Use what you have. Retirement funds, 401ks, stocks, bonds, CDs, mutual funds, even if you have life insurance policies that have a cash value, take an assessment of everything that you have in your power and then see where you can get money. Maybe you can get $20,000 from your 401k and you can get $5,000 from CDs or stocks and bonds or dividend funds or whatever. Then now you have $25,000. Maybe you only needed $10,000 for a conventional loan. You're done and you got a cushion and no money came out of your own pocket. Look at what you currently have. Exhaust all options. Ask questions, okay? And another one that seems like it's kind of obvious, but people aren't doing it, is if you have a regular 9-to-5 job, guys, which is a blessing, okay? Nobody is job shaming. Some people are meant to be full-time investors. Some people don't want to. Some people are meant to be full-time entrepreneurs and self-employed. Some people don't want to. They love their job. Nobody is saying having a job. Listen, I loved my job with Enterprise before, I ventured into so many of the things and then becoming, having my own business. It's because of me working at TransUnion that I have all this knowledge about credit that has been a blessing to me to do my business now, okay? So for your job, are you eligible for a raise? Can you do overtime? Do you get commissions? What about bonuses? Closed mouths don't get fed. Guys, that's the one thing is the difference between, wildly successful people like the 1%ers and people who aren't successful is, in my mind, I always write this down. What is the worst that can happen? If you go to your boss and say, am I eligible for a bonus? What do I need to do to get an increase? Or are there promotions available? I'm looking for more overtime. Can you keep me in mind? The very worst thing they can say to you is no. You got that? So ask questions, because sometimes there's a way for 6 to 12 months to just hustle up extra money through your job to actually get the money for investing. So maybe you're a first-time home buyer. You need $5,000 to $10,000. You maybe can hustle for 6 to 12 months to get $5,000 to $10,000 through overtime, through getting a raise or a promotion, through commissions, through bonuses. Ask, find out what you can do with your current stream of income. And guys, let me stop right there for 1 second, because if you have 5 bills, 10 bills, 20 bills, and you're trying to pay everything on one paycheck, that's why you're struggling. The average millionaire has 7 streams of income, and you can easily have 5 to 10 bills. You can have mortgage or rent, car note, car insurance, cell phone, utilities. You may have school tuition. You may have credit cards. You may have personal bills. You may have student loans. I can go on. If you have 10, 15, 20 bills in one paycheck, hello, Houston, we have a problem. So that's one reason why wealthy people always have multiple streams of income. Nobody said quit your job. Keep your job and do work on other things. You're investing on your business on the side, unless you actually want to do that full time. Then you work on making an exit strategy, but using your job for extra money. Another thing is non-traditional things, selling things on eBay, selling things on Amazon, doing Uber, doing Lyft, doing DoorDash. Do you know how many people I have that have done that? That they have a regular job and they have a goal and they'll start doing Lyft on the side and making $500 to $1,000 a month? Guys, if you need $5,000 and you're doing Lyft at nighttime or on the weekends and you're making $1,000 a month, you can get that in 5 to 6 months. Listen, it's in a season. How bad do you want it? I know people that sell things on eBay and Amazon. Like, I'm not really good at that, but like, I know people that make good money. Listen, I'm a hustler all day long. I done put cars on Turo. I bought cars at auctions and sold them at Craigslist. Like, I do all kinds of, I've taken my stuff to high-end consignment shops and gotten $300 for bags and $200 for a pair of shoes. Like, you'll be surprised. How bad do you want it? Another thing is taking a snapshot of your budget right now. So the only thing you can do to get more money is increase your income or decrease your expenses. Can you cut out your cable bill and just have Netflix? Can you lower your car insurance? Can you lower your cell phone plan? Can you save on where else can you save? Where else can you cut? Cut your expenses, increase your income. Maybe you're not eating out for a whole 6 months. Yes, y'all. Can you sacrifice in this season to get what you want for a lifetime? Everybody nod with me. Yes, we can, Terry. So those are actually some ways. Let me see if there's anything. Oh, and then also like gift money, guys. So gift money from family or friends. But guys, use your gifts. Your gifts will make room for you. ET says it. Jemal says it. I say it. It's biblical. Your gifts will make room for you. What is it? The knowledge, skills, and experience you have to make you some money. I have a client who is a teacher. She needed some extra money. I said, have you thought about tutoring? Like right now, what's going on? COVID-19. It's all these kids are home due to, and they're doing virtual learning. I had said to her, I'm looking for somebody to come to my house and help me with this virtual learning because I can't with my clients. My schedule is too busy to be hovering over them during those school hours when normally they were at school. I will hire somebody to come to my house to do the virtual learning. I know. And so she was like, that's a great idea. So if you bake, can you be more, vocal about, doing cakes for people? If you make dinners, you know what I mean? If you like whatever, if you have a daycare, do you need to increase the amount of clients that you have enrolled? If you are a stylist, what can you do? Can you do specials and more promoting to get more clients? What is your gift? Can you increase that? Can you go from 5 clients a month to 10? Can you go from, if you have a daycare, like I said, can you go from 15 children enrolled to 25 children enrolled? Increase what you're currently doing to get the extra income and then go and invest. The last thing I want to say to you is know how much you need. Do you need 5,000? Do you need 10,000? Do you need 20,000? Do you need 30,000? How much do you need? Quantify how much you need first. That way you know which strategies, how many strategies, because you can use multiple to get the money to invest in finance, to invest in real estate. Because the last thing I want to leave you with is that failure is not an option. Like, no is not the answer, ever. Ever. There's always a way. Income tax refund. How many times have you had an income tax refund and you went and got clothes and went on a girl's trip and you just went on paid off debt, but you could have actually used that for an income producing property, to start a business, to get a down payment on a house. We are in October. Income tax season is coming up. Plan for any refund money to start your business, to invest in your real estate, to buy your very first property. Amen. Got it good. So I hope that was helpful for you guys. And real quick for my nugget, I just want to say that if you have never failed, that is one reason why you're not where you want to be in life. Like, literally, do not be scared to make mistakes. People who are wildly successful make a lot of mistakes, and that's because they try. If you just keep on staying in this safe zone and you're scared to take any risk, then that's where you'll always be. Your blessings come from stepping outside of your comfort zone. So do not think that making mistakes is a bad thing. You need to make mistakes to learn. That's how you get better. And if you play it safe all the time, then you're going to stay right where you are in your safe zone, struggling and watching everybody else play the game. And I know that that may hurt somebody, but I'm trying to free somebody today. So you need to feel that. Yes, be smart and calculated, but at some point you have to jump. You have to take action and understand that you will make mistakes, and it's okay. We're going to try to minimize the damage, be smart about our risk, and know that doing the action and getting started is the best indicator of your success. You have to try. Amen. Have a super amazing day. I hope that that was helpful. Like, share, comment, subscribe, hit that notification button, send my channel to 5 people today. Action item. I would appreciate this video blessed you, and have a super amazing day on purpose.